2020 was a volatile year in both the economy and the financial markets. And well, 2021 could prove to be more of the same. While you might not make any radical investment changes in the new year, the flipping of the calendar is a good time to make adjustments in your current portfolio, and even to take on some new challenges that may not seem like investments in the traditional sense. But trust me, they are. Welcome to the Luxious, where luxury truly comes to life. Today, we'll be talking about the best investments to make in 2021. But first things first, if you haven't yet subscribed to our channel, please do it, and don't forget to click the bell icon. A high-yield online savings account pays you interest on your cash balance. And just like a savings account earning pennies at your brick-and-mortar bank, high-yield online savings accounts are accessible vehicles for your cash. With fewer overhead costs, you can typically earn much higher interest rates at online banks. Plus, you can typically access the money by quickly transferring it to your primary bank, or maybe even through an ATM. A savings account is a good vehicle for those who need to access cash in the near future. A high-yield savings account works well for risk-averse investors, and especially for those who need money in the short term and want to avoid the risk that they won't get their money back. Certificates of deposit, or CDs as they're called, are issued by banks and generally offer a higher interest rate than savings accounts. These federally insured time deposits have specific maturity dates that can range from several weeks to several years. Because these are time deposits, you cannot withdraw the money for a specific period of time without penalty. With a CD, the financial institution pays you interest at regular intervals. Once it matures, you get your original principal back, plus any accrued interest. It pays to shop around online for the best rates. Because of their safety and higher payouts, CDs can be a good choice for retirees who don't need immediate income and are able to lock up their money for a little bit. But there are many kinds of CDs to fit your needs, and so you can still take advantage of the higher rates on CDs. No one can say for certain which way the stock market will head in 2021, but investing in stocks has always been about playing the averages, and the averages strongly favor maintaining a large position in stocks. That said, you may want to become more selective. The major indices like the S&P 500 and the Nasdaq 100 have largely powered forward on the strength of tech stocks. If that sector begins to head south, it can drag the major indices down with it. This is another reason to build your cash reserves. If you're heavily invested in the S&P 500, a large cash position will give you an opportunity to invest in emerging sectors if the general market declines. Given the steady rise in residential real estate prices, as well as turbulence in the commercial real estate market, the sector does look like a mixed bag going into 2021. But that's exactly why it may deserve a closer look in the coming year. I'm a big fan of real estate investment trusts, or REITs, though the sector as a whole did poorly in 2020. Based on the FDIC NAREIT, US real estate index REITs have shed 7.25% through December 24th. But that comes on the heels of a 28% gain in 2019. REITs look like a solid bet after both gains in 2019 and a strong start with the economy in 2020. But no one saw the coronavirus coming at that time, and it proved to be a game changer. Commercial real estate has been negatively impacted by a massive move toward remote basing of employees. Office buildings in many big city downtown areas have seen sharp spikes in vacancy rates, while retail space has been hurt by the closure of tens and thousands of stores. Whether the economy turns up or tumbles down in 2021, the experience of 2020 should serve as a cautionary tale. Millions of workers lost their jobs, tens of thousands of people lost their businesses, and the stock market staged an impressive recovery after its late winter mini crash. The point is, life is unpredictable. At the beginning of 2020, The stock market was at record highs, housing prices were rising, and unemployment was at record lows. The general assumption at the beginning of the year was smooth sailing ahead. If 2021 plays out to be as unpredictable as 2020 has been, paying down or paying off debt will be one of the very best investments you can make. You can ill afford to carry credit cards with 20% interest rates, or even a low-interest home equity line of credit if your job or business reaches jeopardy status in 2021. In addition, paying off a credit card with a 20% interest rate will be like locking in a 20% investment return for several years. The paying off or paying down debt isn't all about preparing for the worst either. It's equally a matter of preparing for the best. Municipal bond funds invest in a number of different municipal bonds or munis issued by state and local governments. Earned interest is generally free of federal income taxes and may also be exempt from state and local taxes too. This makes them particularly attractive for investors in high-tax states or high-tax brackets. Muni bonds may be bought individually through a mutual fund or an exchange-traded fund. You can consult with a financial advisor to find the right investment type for you, but you may want to stick with those in your state or locality for additional tax advantages. Municipal bond funds are great for beginning investors. This is because they offer diversified exposure without the investor having to analyze individual bonds. They're also good for investors looking for cash flow. Municipal bonds are a good selection for investors who live in high-tax states, allowing them to avoid levies and generate income. Their lower yields may make them less attractive to investors in low-tax brackets or low-tax states. Rental housing can be a great investment if you have the willingness to manage your own properties. And with mortgage rates hitting all-time lows recently, it could be a great time to finance the purchase of a new property. However, the unstable economy may make it harder to actually run it, since tenants may be more likely to default due to unemployment. To pursue this route, you'll have to select the right property, finance it or buy it outright, maintain it, and deal with tenants. You can do very well if you make smart purchases. However, you won't enjoy the ease of buying and selling your assets in the stock market with a click or a tap on your internet-enabled device. Worse, you might have to endure the occasional 3 a.m. call about a broken pipe. But if you hold your assets over time, gradually pay down debt, and grow your rents, you'll likely have a powerful cash flow when it comes time to retire. And last on our list is cryptocurrency. It is a kind of digital electronic-only currency that is intended to act as a medium of exchange. It has become popular in the last decade, with Bitcoin becoming the leading digital currency. Crypto has become a hot property in the last few years in particular, as dollars have flown into the asset, pushing up prices and drawing even more traders to the action. Bitcoin is the most widely available cryptocurrency, and its price fluctuates a lot, attracting many traders. For example, from a price below $10,000 a coin at the start of 2020, Bitcoin soared to around $30,000 at the start of 2021. So there you have it, folks. We hope that you found our video informative and helpful regarding your future plans. Our channel is full of interesting videos, so do check out some other stuff as well. Hey, subscribe to the channel and don't forget to click the bell icon so you get notified whenever we upload our next video. Your valuable suggestions are very important to us, so leave as many as you wish.